Okay, let's unpack this. You've got to hear this. A company that was literally built on digging for gold and silver back in the 1800s, I'm talking about pickaxes and dusty mines,
Wow. Yeah.
is now setting its sights on the future, aiming to be a major player in renewable energy and materials. Makes you wonder, doesn't it?
It really does.
Can a company with such deep roots in the 19th century really become a leader in the 21st century, drive toward the low-carbon economy?
And what's fascinating here is just the sheer scale of that ambition. We're diving into Comstock Inc., ticker symbol LODE.
LODE.
Yep. And they've given us a mountain of information to explore, research reports, news articles, a whole stack of financial data.
Yeah.
Our mission in this deep dive is to really understand the core of what they're doing now.
Get a handle on it.
Exactly. Figure out who's in charge and how healthy their finances are, see what the market thinks, and ultimately give you a clear sense of the potential and the undeniable risks if you're trying to get a well-informed perspective on Comstock. They've branched out quite a bit, now operating across 4 main areas: Comstock Fuels, Comstock Metals, Comstock Mining, and Strategic Investments. So where do we even begin to untangle this story?
Good question. Let's start with the basics. What exactly is Comstock doing these days? Chapter 1, Business Understanding.
Well, the core of their strategy is this significant shift away from their traditional precious metals mining.
Right.
They're aiming to transform into a technology and materials company solely focused on decarbonization. What immediately grabs your attention is that they're not just dabbling in one new area, they're simultaneously pursuing multiple high-tech ventures. Now, this could be a massive opportunity, allowing them to tap into several rapidly growing sectors, but it also brings considerable risks.
So spreading themselves thin, maybe?
Potentially. Spreading their resources across numerous complex projects, especially as a relatively new player in these fields, can really stretch their capital and the expertise of their management team. I mean, successfully scaling just one of these ventures is a challenge. So tackling several concurrently really amplifies that strain.
That makes sense. So they're wearing a lot of different hats now. Let's look at how they're bringing in revenue in each of these segments. First up is Comstock Fuels. What's the core business there?
This segment is all about advanced renewable biofuels, including their proprietary Bioleum, sustainable aviation fuel, or SAF,
SF, yeah, we hear a lot about that.
and renewable diesel. The key innovation they're highlighting is producing these fuels from lignocellulosic feedstock.
Okay, break that down.
So that's essentially the raw plant material. They're using things like woody biomass.
Ah, okay, plant stuff.
Exactly. They're also aiming to leverage existing infrastructure for distribution, which could be a significant advantage in terms of cost and speed to market. Their revenue here would come from the direct sale of these biofuels and potentially from licensing their technology to other companies.
Okay, biofuels from plant stuff using existing pipelines, interesting. What about Comstock Metals? That sounds like a completely different direction.
It is. And this is a really fascinating pivot into what's called the circular economy. They're focused on recycling solar panels with a strong emphasis on achieving a zero landfill outcome.
Zero landfill, nice.
Their goal is to recover valuable materials like glass, aluminum, copper, and even silver from the end-of-life panels.
So how do they make money doing that?
Their revenue model here is two-pronged. They charge tipping fees for accepting the old solar panels for recycling.
Okay, you pay them to take the panels.
Exactly. And then they generate further revenue by selling the recovered materials. Interestingly, in the first quarter of 2025, Comstock Metals reported billings of $1.34 million.
That sounds promising.
It does. Now, deferred revenue simply means they've billed for services or products they haven't fully delivered yet, so the cash is coming, but it hasn't been officially counted as earned income yet.
Right.
There's a slight difference in the figures reported across our sources here. Some indicate $7.6 zillion was deferred, while others say it was $0.75 million.
Okay. A bit of discrepancy.
Yeah, but regardless, it means a portion of that $1.34 million hasn't yet hit their income statement.
So they're getting business, but not all the money is recognized immediately.
Got it. Now, what about their original business, Comstock Mining? Are they still pulling precious metals out of the ground?
They are, but even that part of the company is evolving. While they continue gold and silver mining in their historic Nevada location, they're now integrating artificial intelligence and advanced sensing technologies to try and improve their mineral exploration efforts.
AI and mining. Interesting.
Yeah. So the traditional revenue stream from selling gold and silver is still there. And they've also recently monetized some of their Northern District mining claims for over $2.4 million, which is a significant influx of cash to note.
So they're using their past to help fund their future ambitions.
Yeah.
And lastly, there's strategic investments. What does that encompass?
This segment involves Comstock making direct investments in other companies operating in related technology areas. We've seen examples like Green Li-ion, which is involved in battery recycling.
And GenMat AI, which is applying artificial intelligence to the discovery of new materials and mineral deposits.
So investing in others doing similar things.
Sort of. Revenue here can come from returns on these investments if the companies they invest in perform well, and also from selling off their stakes if those investments appreciate in value.
Like they did recently.
Exactly, like their 2023 sale of a battery recycling facility that generated a substantial gain of $28.9 million. Looking ahead, they also have plans to offer engineering services and leverage their own proprietary technologies, like GenMat AI, to generate additional revenue.
Okay, so a real mix of activities across these four segments, from the tangible world of recycling and mining to the more cutting-edge areas of biofuel technology and AI. Now, where do they stand in these markets? What's their current size and reach?
They're positioning themselves as an emerging technology and materials company, and that description is really key.
Emerging, right.
While they don't yet have the market share of established industry giants, they are emphasizing their technological advantages. For instance, in solar panel recycling, they claim to have reached a technology readiness level of 7.
TRL 7, what does that mean practically?
That indicates their technology is beyond just an idea and has been demonstrated in a real-world setting. They also assert a very impressive 100% material recovery rate in their solar recycling process.
100%. That's huge if true.
It is. And in the highly ambitious area of renewable fuels, they've set a long-term goal of producing 200 million barrels per year by 2035. That's a massive target.
It certainly is. So are they just talking about these goals, or are they making tangible progress?
We are seeing progress. Their metals segment has its first commercial demonstration facility, which has been operational for nearly a year.
Okay, real operations.
Yeah. In just the first quarter of 2025, they processed over 80,000 solar panels, representing over 4 million pounds of material. They're now planning to scale up significantly to an industry-level facility with an initial capacity of 50,000 tons per year, with the potential to double that to 100,000 tons.
Big plans. And fuel.
Their fuel segment is at an earlier stage of commercialization, but they do have pilot production capabilities, are actively seeking Series A funding, and have secured a notable $152 million in qualified private activity bonds from the state of Oklahoma.
Okay, that's significant government backing.
It indicates a level of confidence in their project, definitely.
So they've got some runs on the board, particularly in the metals area. What's the core message they're trying to convey to investors and the market? What's their main value proposition?
Their central pitch is about delivering innovative solutions for decarbonization. They're highlighting their ability to do this profitably by utilizing existing infrastructure where possible, combined with their own advanced and, they claim, proprietary technology.
So using what's already there, plus their secret sauce.
Pretty much. A significant part of their story is this focus on circularity, efficiently extracting value from underutilized resources, like waste biomass for fuels, and end-of-life electronics, like solar panels for material recovery.
Makes sense.
However, we need to keep in mind that while the metal segment is starting to show promising revenue, with those deferred figures suggesting future income, the company has historically relied on non-operational gains.
Right, like selling those investments you mentioned.
Exactly, to bolster their financial results. So the crucial question remains, can these newer ventures generate sustainable operational profits?
Right. So to quickly recap Chapter 1, Comstock is no longer just a mining company. They're now involved in renewable fuels, solar panel recycling, still doing some mining with an AI twist, and making strategic investments in other tech ventures.
Correct.
Their revenue models vary across these segments, but many of these new ventures are still in the early stages, and historically, the company hasn't always relied on these core operations for its income. Now, let's move on to Chapter 2, the management team. Who is leading this transformation, and what does their past tell us?
This is where we need to dig a little deeper into the people steering the ship. At the helm is Corrado de Gasperis, who has been the CEO since 2010 and also became executive chairman in 2015.
Long tenure.
Very. His professional background is quite diverse, spanning manufacturing, finance, metals, mining, and even recycling. Before his time at Comstock, he was the CEO of a company called Barzell Industries, Inc.
Barzell Industries. Why does that name ring a bell?
Well, this is a really important point to consider. Barzell ended up selling off a significant portion of its assets through a bankruptcy process after Mr. de Gasperis had resigned from his position.
Oh, okay. Bankruptcy. That's not ideal.
No. He also held senior roles at Graftech, and earlier in his career was a CPA and partner at KPMG.
Okay, a long and varied career, but that Barzell bankruptcy certainly stands out. Who else is part of the key leadership team?
We also have William McCarthy serving as the chief operating officer, who often takes the lead on investor communications. David Winsness is the chief technology officer for the fuel segment. Kevin E. Chrysler heads up the fuel segment and also serves as a director.
Okay.
Raul Bobbely is the chief engineering officer, and they recently brought on Dr. Elvis Ebicade as the director of aviation for Comstock Fuels, specifically to spearhead their sustainable aviation fuel initiatives.
So, seems like they have people with the right titles, at least.
On paper, it looks like a team with relevant experience in these new areas, yes.
But that past track record piece is still something to consider. This long tenure at Comstock, with what our sources suggest is shareholder value erosion, coupled with that Barzell bankruptcy. Are there other voices raising concerns about the leadership?
Yes, there are definitely critical perspectives out there. A Nevadagram article provides a very critical view of Mr. de Gasperis' leadership.
Nevada.
Yeah. It alleges financial mismanagement at Comstock, draws direct parallels to the financial difficulties experienced by Barzell, and questions his overall approach to leading the company.
Well, okay. Strong words.
Very. The article also points to negative sentiment among investors, accuses management of a lack of transparency in their communications, and highlights what it describes as stupendous losses for stockholders, despite what it terms generous paychecks for the leadership team.
Yikes. That's some pretty strong criticism. What about their history of navigating difficult economic periods? We mentioned Barzell during the 2008-2009 recession.
That Barzell situation during the global recession and the significant downturn in steel prices is the primary example we have from the sources of Mr. de Gasperis leading a company through a major economic crisis.
And the outcome wasn't great.
Ultimately, as we mentioned, Barzell's assets were sold off through a bankruptcy auction. How a leader manages a company through such severe economic headwinds is obviously a critical test of their abilities.
And how open and transparent is Comstock in its communications with investors and the public these days?
The company uses all the standard channels: quarterly earnings calls, webinars, press releases, their corporate website, and social media to communicate with the investment community.
Standard stuff.
Right. However, it's worth noting that the same Nevadagram article we discussed earlier also accuses them of a lack of transparency and of consistently presenting an overly optimistic view of the company's prospects, even when the underlying financial realities might be more challenging.
So definitely a divergence in how their communication is perceived. What about their broader ethical reputation? Any accolades or any other red flags besides the Barzell situation and the Nevadagram article?
The sources we have don't point to any specific ethical awards or recognitions for the company or its leadership. However, those two elements we've already discussed, the Barzell bankruptcy and the criticisms leveled in the Nevadagram piece, certainly raise ethical questions that anyone considering an investment in Comstock would need to carefully consider. Unfortunately, the full definitive proxy statement, the DEF 14A,
The proxy statement, yeah.
which often provides more detailed information on corporate governance and potential conflicts of interest, wasn't fully accessible within our source materials.
Right. So when we try to assess the leadership in terms of honesty, capability, and being shareholder-oriented, what's our overall sense based on what we've found?
Assessing honesty from the outside is always a challenge. They do communicate regularly, but those serious criticisms regarding their transparency and past performance are definitely something to weigh.
For sure.
In terms of capability, the management team does have experience in relevant industries, and they have secured partnerships and funding, which suggests a degree of ability to move projects forward.
Okay, they can get deals done.
Seems so. However, we must balance that against Comstock's historical financial performance under this leadership, which includes significant losses and the ultimate outcome at Barzell.
Right, always comes back to that.
And whether they are truly shareholder-oriented is also a mixed picture. The reverse stock split they implemented was stated as a move to increase their capital capacity for growth, but such actions can often be viewed negatively by investors.
Usually are, yeah.
The executive salaries are reported at $495,000 each for the top executives in 2024, with no bonuses mentioned, which investors will have their own perspectives on.
Nearly $500,000 each. Okay.
The planned spin-off of the fuels segment could be a strategic move to unlock value for shareholders, but then we have those Nevadagram criticisms alleging significant destruction of shareholder value and the reliance on funding through methods like convertible notes.
Which can dilute existing shareholders.
Exactly.
Okay.
Can lead to dilution of existing shares. It's a complex picture with no easy answers.
Definitely sounds like a lot for potential investors to carefully consider. Okay, let's move on to Chapter 3, Financial Health. This is where we really dig into the numbers to see how the company's performing. What are some of the key financial metrics that stand out?
Let's dive into the financials. As of around May 9th of 2025, Comstock's market capitalization was approximately $63.56 million.
Relatively small caps then.
Yeah, although we did see slightly different figures reported in various sources, ranging from about $59 million to $68 million. The share price closed at $2.39 on May 13th, 2025.
Right.
Their trailing 12-month price-to-earnings ratio is minus 1.14, which isn't a meaningful metric because they haven't had positive earnings.
Your negative PE tells you they're losing money.
Right. The forward PE ratio is also negative. Looking at revenue growth, we see an increase from a very low $0.2 million in 2020 to $3.02 million in 2024.
So growing, but from a tiny base.
Correct. Notably, in the first quarter of 2025, Comstock Metals invoiced $1.34 million. As we discussed earlier, a portion of this is deferred revenue, either $0.66 million or $0.75 million, depending on the source, but $0.75 million was recognized as revenue, which represents a significant increase.
That revenue jump in Q1 2025 for the metals segment certainly looks encouraging. But what about their profitability? Are they actually making money?
That's where the financial picture becomes more concerning. For the full year 2024, their gross profit was $2.56 million, resulting in a gross profit margin of around 84.8%.
84.8% gross margin. That's actually quite high.
It looks quite strong on the surface, yes. However, their operating income showed a substantial loss of $39.67 million.
Wow.
And their net loss was even greater, around $53.32 million, leading to a very negative net profit margin.
So they make good margin on what they do sell, but their operating costs are enormous compared to that.
Precisely. We also observed discrepancies in the reported EBITDA figures for 2024, ranging from a negative $16.17 million to a negative $28.82 million, which again underscores the need for caution when interpreting unaudited financial data.
So while their gross profit margin in 2024 was high, their operating and net losses were significant. What about their debt situation? Are they carrying a lot of debt?
The debt-to-equity ratio is reported in a range of approximately 23% to 38% across our different sources.
Moderate, maybe.
Kind of moderate, yeah. They also have that Kips Bay convertible note with an outstanding balance of $4.35 million as of early May 2025, which is in the process of being converted into shares.
More potential dilution then.
Yes. Their free cash flow has been consistently negative. For 2024, depending on the source, it ranged from a negative $16.18 million to a negative $31.85 million. And their trailing 12-month cash flow from operations is also negative at $15.07 million. Consistently. The price-to-book ratio is hovering around 0.88 to 1.17.
So close to pitch value. Maybe slightly above or below, depending on the day. Okay. So to summarize their profitability and balance sheet at this point.
They are not currently profitable. That large net loss in 2024 highlights that. While they did report a profit in 2023.
Right, but that was from selling stuff, not operations.
Exactly. Largely attributed to gains from their investments, not from their core business operations. Their balance sheet doesn't appear exceptionally strong. They had relatively low cash reserves at the end of 2024, a moderate debt-to-equity ratio, but the presence of convertible debt and their overall low liquidity are concerning factors. Their short-term assets do exceed their short-term liabilities, but they don't cover their longer-term liabilities.
That doesn't paint a picture of strong financial stability. Let's dig a bit deeper into that. How consistent have their earnings been over time?
Earnings consistency is certainly not a characteristic here. Looking back at their net income from 2020 to 2024, it's been quite erratic and predominantly in the red.
Mostly losses.
Mostly. We saw positive net income of $14.93 million in 2020 and $9.16 million in 2023. But as we've noted, these were primarily driven by non-recurring, non-operational events.
One-offs.
Right. Their operating income, on the other hand, has been consistently negative throughout this period.
And what about dividends? That's often a sign of a more mature and financially stable company.
Comstock does not currently pay any dividends, and there's no history of them doing so. This is fairly typical for a company focused on growth and reinvesting its capital.
Fair enough for a growth stage company. What about how they manage their debt? Are they carrying a heavy burden?
Their total liabilities at the end of 2024 were around $31.54 million, and their total debt is estimated to be approximately $13.9 million. The Kips Bay convertible note we mentioned, along with their historical reliance on both convertible debt and the sale of equity to raise capital, are significant considerations.
Always needing more cash.
It appears so. These financing methods carry the risk of diluting the ownership stake of existing shareholders. It's also noteworthy that the management team has stated a goal of generating over $50 million through the monetization of some of their legacy mining assets.
That's all off the old stuff.
Which suggests they recognize the need to improve their financial liquidity.
Finally, how efficient are they at managing their working capital? Things like inventory and short-term obligations.
Their current ratio, which is a measure of their short-term assets relative to their short-term liabilities, has been around 1.56 in 2023 and 1.6 in 2024.
So assets cover liabilities in the short term.
Yes, more recent data indicates that their short-term assets still exceed their short-term liabilities. However, the relatively low cash balance within their current assets is still a point of concern.
Right. Need cash to operate.
And furthermore, the fact that they've consistently experienced negative cash flow from their core operations, requiring them to depend on external financing and asset sales, isn't a sustainable long-term strategy unless they can achieve profitability in their operations.
Got it. So to wrap up our look at financial health, their earnings are highly volatile and mostly negative, with the occasional profits not stemming from their core business. Their current level of debt poses a risk given their negative cash flow, net losses, and low cash reserves, meaning they need to continually seek external financing, often diluting existing shareholders. Their plan to sell off assets indicates an awareness of their financial needs. Overall, it paints a picture of a company with significant potential, but also substantial financial hurdles to overcome. We've covered a lot in this first half: their evolving business model, the management team leading the charge, and their current financial standing. When we come back, we'll turn our attention to market sentiment, who actually owns the company, and take a closer look at the risks and opportunities facing Comstock. Stay with us. You're in the Deep Dive. Welcome back to our deep dive into Comstock Inc. Before we pause, we examine their business operations, the management team, and their financial health. Now let's turn our attention to Chapter 4, what the market thinks of Comstock, ticker symbol LODE. What's the overall feeling surrounding this stock?
Well, the prevailing market perception of Comstock appears to be that it's a high-risk, speculative investment.
Not surprising, given what we've heard.
No, it's understandable given their developmental stage in these relatively new technology areas, their history of operating losses, and the fact that they're relying on the future success of technologies that haven't yet been proven at a large commercial scale.
Makes sense.
The stock itself has exhibited high volatility. That seemingly impressive one-year price change of over 800% that's being reported is very likely heavily influenced by the reverse stock split they implemented in February 2025.
The reverse split effect.
Exactly. Rather than purely reflecting organic market enthusiasm, high volatility like that often suggests speculative trading rather than a focus on long-term value.
That makes sense.
Yeah.
A reverse stock split can give us misleading impression of growth, right?
Yeah.
What about analyst price targets? Do the professionals on Wall Street have a more defined outlook?
This is where we see a really significant divergence in opinions. It's actually quite striking. Fintel has an average one-year price target way up at $26.52, which would represent a 900% increase from where the stock was trading in early May 2025.
Whoa, $26. That seems ambitious.
Yeah. Extremely. This target was significantly revised upwards in early March. However, it's important to understand that Fintel's price targets are often generated based on a collection of various analysts' forecasts, and they provide a generic calculation example, so it doesn't necessarily reflect a deep, individual analysis of Comstock's specific situation.
Okay, so maybe take that one with a grain of salt.
A large one. On the other hand, Public.com shows a consensus analyst price target of just $3.28.
Much more down to earth.
Based on ratings from 4 analysts who are mostly recommending a buy or strong buy. We also noted that Noble Capital Markets upgraded the stock to an outperform rating back in August 2024.
So a huge gap between Fintel and the consensus.
A vast difference. It really underscores the extreme uncertainty surrounding Comstock's future valuation and prospects. It strongly suggests the high level of risk involved and how challenging it is to value this company using traditional methods at this stage of its development. Investors should exercise considerable caution when relying too heavily on any single analyst target, especially when there's such a wide range of opinions.
That kind of disagreement among analysts definitely signals a lot of uncertainty. What about recent news and events? Have any of those had a noticeable impact on how the market views Comstock?
We've seen a few notable recent developments. Their first quarter 2025 earnings report, released in early May, showed an earnings per share figure that missed analyst expectations.
Missed earnings, not good.
Generally not. Interestingly, the stock price only experienced a very small increase following the announcement.
Huh. Maybe the bad news was priced in.
Could be. The report did highlight that significant surge in Comstock Metals revenue and their new partnership with RWE Clean Energy, which was likely viewed positively.
Right, the RWE deal.
As it provides them with a major potential customer and a source of feedstock for their recycling operations. The closing of that strategic investment from Marathon Petroleum in Comstock Fuels during the first quarter was also a key validation and a significant funding event for that particular segment.
So, Marathon putting money in is a good sign.
Definitely a positive signal. On the other hand, the reverse stock split in February often isn't well received by the market unless it's accompanied by very strong positive catalysts.
Which maybe weren't there.
Potentially. And then we have the U.S.-China tariff agreement in mid-May, which could have a mixed impact, potentially leading to lower input costs for some materials, but also perhaps reducing the economic incentive for domestic recycling and fuel production if imported goods become cheaper again.
Tricky.
What's interesting is that despite some seemingly positive news, such as the deals with RWE and Marathon and the strong Q1 metals revenue, the stock price reaction has been relatively muted.
Yeah, you'd expect maybe a bigger pop.
Exactly. This could suggest that the market remains cautious, may have already anticipated these developments, or that the lingering concerns about their history of losses and ongoing need for funding are overshadowing the positive news.
So some potentially positive signals, but maybe not enough to fully sway the market's overall cautious stance. What about short interest in options activity? Can those indicators give us any further clues about market sentiment?
Short interest, as of early May 2025, was at a moderate level, representing around 5.68% of the company's publicly traded shares, with approximately 3.2 days needed to cover that short position.
So some people betting against it, but not a huge number.
Correct. It indicates that there is some level of bearish sentiment, but it's not an overwhelmingly large short position. Looking at the options activity for the May 16, 2025 expiration date, we observed significantly higher open interest in call options at the $2.50 strike price compared to put option.
More calls than puts at $2.50. Interesting.
Yeah, this could suggest some degree of bullish speculation or hedging activity around that price level. The overall put-call open interest ratio was also leaning slightly bullish.
Interesting. So a mixed picture in terms of market sentiment. Some potential upside being bet on in the options market, but still a noticeable degree of caution reflected in the short interest and the relatively subdued reaction to positive news. Let's move on to Chapter 5. Ownership structure. Who are the key stakeholders in Comstock?
Examining who owns the company can provide valuable insights into alignment of interests and potential influences on its direction. Institutional ownership in Comstock is relatively low.
Not many big funds.
Relatively few, representing around 5.5% to 6.9% of the outstanding shares, distributed among a number of different holders. Some of the larger institutional holders include Vanguard, Group 1 Trading, Simplex Trading, and Fidelity's Extended Market Index Fund, GSIP-SM.
Okay, some index funds, some trading firms.
Right. We did note some recent changes in institutional positions, with Vanguard, Geode Capital Management, UBS Group, and PFG Investments increasing their holdings, while Renaissance Technologies decreased their stake.
Rentech sold some.
And notably, BlackRock significantly reduced their holding in the first quarter of 2025.
BlackRock reducing is interesting.
It is. The fact that institutional ownership remains modest, even with their strategic shift into these high-growth technology sectors, might suggest that larger, more sophisticated investors still perceive significant risks or view it as a highly speculative investment.
What about the people running the company? How much of a stake do the insiders, the management, and board members have?
Insider ownership is around 4.98% of the outstanding shares, which translates to approximately 1.21 million shares.
So about 5%?
Not huge. Not huge. CEO Corrado de Gasperis directly owned a little over 135,000 shares as of mid-May 2024, and that included a purchase of 125,000 shares around that time.
Okay, he bought some shares. That's usually seen as positive.
Generally, yes. Over the 18-month period leading up to May 2025, there was a net insider purchase of about 156,500 shares in total, with other executives like Raoul Bobley, Stephen Drostoff, and William McCarthy also making purchases.
So some buying across the board.
Some buying, yes. The CEO's recent purchase is generally seen as a positive signal, but his total holding is still a relatively small percentage of the total shares outstanding, less than 0.5%.
Right, less than 0.5%.
An aggregate insider ownership of around 5% isn't exceptionally high, so while there's some alignment of interest, it might not be the strongest indicator on its own. The definitive proxy statement, the DEF 14A, would contain more detailed information on insider holdings.
So a significant portion of the company is owned by the general public and other entities then?
Yes, the vast majority of the shares, around 89.7%, are held by the public and other entities that are not considered insiders or major institutions.
Oh,
This diffuse ownership structure typically means that the management team and the board of directors have significant control over the company's strategic direction, as there aren't large individual shareholders who can exert major influence.
you mentioned the DEF 14A earlier. What insights does that document provide into Comstock's corporate governance?
The definitive proxy statement, filed in early April 2025 for their upcoming May shareholder meeting, gives us a look into their corporate governance structure. They were proposing the election of 7 directors, ratifying their independent accounting firm, and holding a non-binding advisory vote on the compensation of their executive officers.
Standard proxy stuff.
Pretty standard. Importantly, a majority of their nominated directors were deemed to be independent, which is generally considered a good corporate governance practice.
Majority independent board. Good, yes.
They also have fully independent audit, compensation, and nominating and governance committees, which are also positive features for ensuring oversight and accountability.
Also good signs. What about pay?
Looking at the executive compensation for 2024, the base salaries for the top executives, including the CEO, were each set at $495,000, and the summary provided did not list any cash bonuses awarded for that year.
Nearly $500,000 base, no bonus listed. Okay.
Of course, the appropriateness of this level of compensation needs to be evaluated in the context of the company's overall performance and the returns delivered to shareholders.
Right, got to compare pay to performance.
Exactly. The DLF 14A would contain more specific details on the security ownership by management and significant beneficial owners, as well as the full details of the executive compensation packages.
Okay, so a board with a majority of independent members and key independent committees. But the details of the executive compensation package are something investors would need to review in the full filing and assess against the company's results. Let's move on to Chapter 6. Risk assessment. We need to weigh the potential positives against the potential negatives. Let's do a quick SWOT analysis. What would you identify as Comstock's key strengths?
On the strength side, they definitely possess proprietary technology and intellectual property in both their fuels and metals segment.
Their tech, yeah.
They are claiming an early mover advantage and have obtained some key certifications in the solar recycling industry. Their strategic partnerships with major players like Marathon Petroleum and RWE are a significant positive.
Those big names help.
They do. They've also secured a notable level of government support through those bonds in Oklahoma. Their diversified approach across fuels, metals, mining, and strategic investments could offer a degree of resilience.
Spreading the bets a bit.
Right. And the management team does bring experience in specific industrial and mining sectors, although, as we've discussed, there are important caveats to consider regarding their track record.
And what about their key weaknesses? Where might they be most vulnerable?
Their weaknesses include their history of significant financial losses and their ongoing reliance on external financing.
The cash burn, yeah.
They have relatively low cash reserves. There's a substantial execution risk associated with trying to scale up multiple new and complex technologies concurrently.
Trying to do too much at once.
It's a risk. The management team's past track record, particularly the Barzell situation, is a concern. They have limited brand recognition in these new markets they're entering, and the potential for further dilution of shareholder value through continued financing activities is definitely a weakness.
Okay, so some significant challenges to overcome.
Yeah.
But what opportunities could Comstock potentially capitalize on?
They are targeting large and rapidly growing markets in both renewable fuels and solar panel recycling.
Huge markets.
Absolutely. Which are benefiting from increasing regulatory support and societal demand. There's potential for them to generate revenue through licensing their technologies to other companies.
Licensing could be big.
Could be. The planned spin-off of Comstock Fuels could unlock value for shareholders if that segment is valued more highly on its own. The U.S. tariffs on imported goods, despite their complexities, could potentially create increased demand for domestic recycling and fuel production.
Tariffs helping domestic players.
Potentially. And advancements in artificial intelligence could lead to improvements in their mining operations.
So, some potential upsides on the horizon. Finally, what are the major threats that Comstock needs to be mindful of?
They face intense competition from larger, more established companies with greater resources.
Big players already there.
Definitely. The risk of technological obsolescence is present in these rapidly evolving fields. The availability and the cost of their key feedstocks, biomass for fuels, and end-of-life solar panels for recycling are critical uncertainties.
Need the raw materials.
Critically, they're heavily dependent on the conditions of the capital markets to secure further funding. Changes in government regulations and political landscapes, including potential shifts in those U.S. tariffs, pose ongoing risks.
Regulatory risk, yeah.
Those 2025 tariffs specifically could increase their costs for essential equipment and materials and potentially slow down the broader adoption of clean energy technologies. The uncertainty surrounding the temporary nature of the tariff agreement with China adds another layer of complexity to the economic outlook.
So, a lot of interconnected factors and external forces that could impact their success. Now, let's bring it all together in Chapter 7, our brief conclusion. What's the overall picture we can draw of Comstock at this point?
Comstock is clearly in the midst of a significant transformation, positioning itself at the intersection of industries with high growth potential but also inherent risks.
High risk, high potential reward, maybe.
That seems to be the narrative. We've examined a company with a complex story, a fundamental shift from its historical core into cutting-edge technologies. Key takeaways include their diversified but still early-stage business model, a management team with a history that requires careful consideration.
A checkered past, some might say.
Well, certainly factors to weigh heavily. A financial situation that urgently needs to demonstrate sustained profitability and stability, a market that is cautiously optimistic in some corners but largely skeptical, and an ownership structure that concentrates control within the management team. It's crucial to reiterate the highly speculative nature of an investment in Comstock at this stage, which stands in stark contrast to traditional value investing principles focused on established, profitable enterprises.
This is not your typical value play.
Not at all. They need to demonstrate significant and consistent progress in achieving profitability and strengthening their financial foundation.
So the central question for anyone looking at Comstock seems to be this. Considering their ambitious pivot and the volatile market conditions they're navigating, is this a high-stakes bet on a greener future? Or is it a company whose past financial struggles are simply too significant to overcome?
That's the million-dollar question, isn't it?
And what will the upcoming spin-off of Comstock Fuels really reveal about the underlying value or the inherent risks within this multifaceted organization?
And that brings us to a little preview of a future deep dive. We've touched on Comstock Fuels and their claims of possessing unique and valuable technology.
Their secret sauce.
Right. In a future analysis, we're planning to specifically investigate those technological claims. Can their nearly impossible to replicate intellectual property truly disrupt the biofuel industry?
Sounds fascinating. So you can subscribe to the Stock Analytics AI YouTube channel to make sure you catch that and all our future in-depth analyses.
Absolutely.
And just a quick reminder, our analysis today has been based on publicly available information and incorporates AI-assisted research in our process.
Thanks for taking this deep dive into Comstock Inc. with us today. We encourage you to share any insights or questions you might have.
And don't forget to subscribe to the Stock Analytics AI YouTube channel for more detailed analyses and to stay updated on our future deep dives into fascinating companies and market trends.
And remember, our analysis incorporates both traditional research methods and the capabilities of artificial intelligence as part of the analytical process.